Ladies and gentlemen, good day and welcome to Minda Industries Limited Q1FY22 Earnings Conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Sunil Bora, Group CFO, Minda Industries Limited. Thank you, and over to you, Mr. Bora.
Yeah, thank you, Bikram. Good evening and a warm welcome to all the participants. You and your loved ones are well and safe. We had once again saw challenging times during last quarter on rise of second wave of COVID-19. We as a country, as an industry, and as a company have shown exemplary resilience to such challenging times. We hope you had a chance to have a quick look at our financial results and presentation that is uploaded on stock exchange as well as the company's website. I'll briefly discuss about the business landscape and then update on our performance in the preceding quarter, following which we will be glad to respond to your queries. Health and safety of our people, i.e. our employees, as one family becomes the topmost priority during such times. Care for our people like family is embedded in our group vision statement to be sustainable global organization. Pursuing our vision, Uno Minda Group has always provided unwavering support to the employees and their families. During this period as well, we had taken several measures and initiatives, including but not limited to proactive testing, vaccination camps, financial assistance, online doctor consultants, medical consulting, counseling, etc. We had also set up COVID care centers with oxygen beds at various locations for our employees and their families to provide immediate medical attention in case of requirement of hospital facilities. Unfortunately, we had lost lives of some of our employees to the COVID battle. We stand with their families, and besides additional financial support, we are providing permanent job opportunity and education support to their children till graduation. Coming on to financial performance, I'll briefly discuss about the business landscape and then update on our performance in the preceding quarter. On the business landscape, on the national front, data suggests swifter than expected recovery from the second wave slump, and this trend continues in early August, with a fat tail in number of cases across the country. While the COVID-19 cases remain flat around 40,000 a day and close to 5 million doses per day, the vaccination pace is higher than the daily rate of 3.9 million in June. There have been statewide divergences on the seroprevalence rate, infection cases, vaccinations, and the lockdown situation. Some states are doubling down on restrictions like Karnataka and Tamil Nadu, while others like Maharashtra are easing restrictions. Manufacturing activity in India had rebounded to a 3-month high in July after contracting in the previous month. Factory orders rose amid reports of improved demand and easing of restrictions. Strengthening international demand contributed the uptick in total order books. New export orders expanded markedly in July, following a moderate contraction in June. Automobile retail sales in India came back strongly in July and continues to do so in the month of August with the opening of dealerships across the country as COVID-led restrictions were eased in the affected states. Besides, the low base effect also continues to play its part. PV segment recovery is impacted by semiconductor shortage. Long wait periods due to supply side constraints continue to persist for last few months. Dealers are reporting 2 to 4 months waiting on select variants. Besides chip shortage, the Delta variant of COVID, if it goes out of proportion, can be another deterrent and put brakes in on auto's retail recovery. Two-wheeler sales rose 28% in July as compared to corresponding month last year, which was a low base. Deeper and wider penetration of the second wave of pandemic into the hinterland, temporary closures of dealerships, and high channel inventory moderated recovery of two-wheelers. Coming to our quarterly financial performance, you may refer to slide number 5. At a consolidated level during Q1 of FY22, The company reported revenues of 1,603 crores as against 468 crores in Q1 of FY21. Unlike Q1 FY21, it was not a complete lockdown in the recent quarter. Most of the OEM had restarted production in June after maintenance or temporary shutdown in May. Some of the OEMs had even continued their operation to meet their export commitments. Sequentially, auto industry volumes were down by 36%, whereas our consolidated revenues fell by 28% quarter-on-quarter, depicting we had continued our outperformance even in these challenging times. EBITDA for Q1 FY22 was at 147 crores in comparison to EBITDA of negative 84 crores for the corresponding quarter. EBITDA margin have also decreased from 13.5% in Q4 of FY21 to 9.2% in Q1 FY22, primarily due to negative operating leverage. There were commodity pricing pressures as well, which were partly offset by favorable product mix and process improvement during the quarter. Profit before tax for Q1 FY22 was at 44 crores as against PBT negative of 175 crore in Q1 FY21. Share of profit of loss of associates joint ventures for the quarter have improved to negative 5 crore from 16.2. Our CNG business under Minda Westport and infotainment business with Denso 10 continued to do well during the quarter. Our safety systems and seatbelt business with TG and Kose Minda Aluminum didn't do so well due to impact of COVID-19 and hence were negative during the quarter. Moving to the product lines, you will please refer to slide number 7 and 8. Starting with switching systems, the segment achieved revenue of 441 crores for Q1, contributing about 10% of consolidated revenues. We have further received orders from Indian OEM for four-wheeler switches, increasing their share of business from 50% to 60%. Moving to acoustics or acoustic business, it has achieved a revenue of 150 crore for Q1, contributing 9% of our consolidated revenues. Impact of COVID-19 on this business has been lower as major portion of revenues for our acoustic business is contributed by our European subsidiary Clarton. Clarton has also received further orders of advanced electromechanical horns from a European OEM. Moving to our casting business, it has achieved revenue of 265 crore for Q1, contributing to 17% of our consolidated revenues. We have received further orders from Korean OEM for LPDC four-wheel alloy wheel, making further inroad in increasing kit value and share of business with them. We have commissioned 3 lines out of total 4 lines at our two-wheeler alloy wheel plant at Supa, and the 4th line is expected to be commissioned in Q2 FY22. The capacity expansion for four-wheeler alloy wheel at Bawal is under progress. Moving to lighting business, it has achieved revenue of 323 crores for Q1, contributing to 20% of our consolidated revenues. We have received additional orders from India as well as Japanese two-wheeler OEMs, mainly for LED headlamps, further increasing our kit value with them. Our seating business achieved a revenue of 197 crore for Q1, contributing 12% of our consolidated revenues. The company has received additional export orders worth 75 crores peak annual value from American and European OEMs. Moving to other product businesses, it has achieved revenue of 227 crore for Q1, contributing 14% of overall top line. Other businesses mainly comprise of sensors, blow molding business, ICIS, battery, etc. Moving to slide 11, in terms of our revenue pie for the quarter ended 30th June 2021, OEM business accounted for 92% and aftermarket business around 8% for Q1. The aftermarket share of business is lower than normal, primarily due to staggered lockdowns in various states across the country. Our sales from international market, i.e. export from India plus sales from overseas operations, stands at 23% of total consolidated revenues. Our international revenues contribution has increased as the impact of COVID-19 in European subsidiaries was lesser relative to India. In summary, we would like to highlight that Q1 has historically been lower than Q3, Q4 for the industry, as festivity and New Year usually boost sales in Q3 and Q4. Besides, as you know, there are annual price adjustments which contributes to better profitability in latter part of the year. Besides cyclical lower volumes, Q1 was further impacted by second wave of COVID-19. In spite of challenging times, we have been able to post a resilient performance. We have seen sharp recovery in auto industry in July, and momentum is continuing in August. With normalcy returning, we are confident to soon retreat back to performance levels demonstrated in previous quarters. Now moving on to few recent company updates. First on Harita merger. As you are aware that we have completed merger of Harita Shipping Systems with Minda Industries pursuant to the scheme, and as per the option chosen by shareholders, we have issued equity shares and redeemable preference shares as part of the consideration. Though preference shares were issued with maturity of 36 months, preference shareholders had also option for early redemption within 3 months. Barring few shareholders holding around 10,000 odd shares, all other shareholders have already opted for early redemption. Moving to QIP, as you know, that company has successfully closed its qualified institutional placement of equity shares at issue price of 720 per equity share for a total of 97.22 lakh equity shares. So overall fund raised was around 700 crores. The funds will be utilized for following broad purposes. First is redemption of preference shares issued to shareholders of Harita pursuant to merger as explained above. Acquisition of Ferrer stake in Harita Ferrer, which has already been announced. Repayment of some of the debt, some investment in a subsidiary company, and some other general corporate purposes. In terms of the merger of iConnect, we have made further progress in merger exercise of Minda iConnect. The scheme has been filed with NCLT on 2nd June 21. We are now awaiting NCLT for announcing the date of convening shareholders and creditors meetings. We expect the merger process should be completed in the current financial year. Minda TG Rubber, as part of our corporate restructuring process, post the dilution of 1.1% stake in MTG, it had become JV company and had ceased to be subsidiary of the company. MTG is proposed to be merged with TG Minda. The respective boards have already approved the schemes. We will be filing the scheme with NCLT post receiving NOC from creditors. In terms of EV opportunities, our EV initiatives continues as per plan, as earlier communicated, with smart plug telematics already under production and commercial sales resumed as commercial sales started. Body control modules has also progressed to under production from under development, and other products like DC-DC converter, onboard charger, and BMS is under development. Moving to our cash flows and debt level, our net debt as of June 30th was 1,227 crores compared to 800 as on March 21. The net debt as at 30th June also includes non-convertible redeemable preference shares of rupees 229 crore issued to shareholders of Harita pursuant to merger scheme, which was part of current liabilities in March 21 under deferred purchase consideration. Working capital requirement had also increased little bit during the quarter, primarily due to lockdown situation in May, and we believe that was largely temporary. Our net debt to equity ratio is still healthy at 0.47x. As you are aware that we have 700 crores under QIP, part of the proceeds, as you mentioned earlier, will be used to reduce the debt. This will further improve our debt equity ratio and strengthen the balance sheet. In terms of capex, as you are aware, we had announced project capex for setting up additional plants in Gujarat for four-wheeler automotive lighting and expansion at Bawal by setting up 60,000 capacity for four-wheel alloy wheel plant. We had commenced capital expenditure on these projects and have incurred around 30 crores. The project progress is satisfactory and is expected to start operation in first half of FY23. Moving to ESG, we all know ESG has gained prominence in last few years. However, we have already been working on these areas for last few years. We have installed rooftop solar installation across our plants, meeting 20% of energy requirement of these plants. We have recently also invested in two entities, i.e. CSC Dakshina and Strong Sun, which are developing solar power plant and will be supplying power to us on completion. We target to achieve 40% of our energy requirement through solar energy. We have also been working on reducing water consumption, carbon emission, and waste reduction. As you know, we also run charitable trusts for upliftment of underprivileged and women empowerment. Today, through our charitable trust, we touched and benefited over 12,000 people from 18 villages across 7 states in India. On governance front, we have set up very robust corporate governance framework with well-diversified board to oversee the same. We are constantly improving our governance framework and policies by benchmarking to the best practices. Our efforts in the field of corporate governance have also been recognized by reputed external organizations like the Institute of Directors by awarding one of the most prestigious awards, i.e., the Golden Peacock Award for Excellence in Corporate Governance 2020. We are committed to continue to this journey of excellence. We have also recently appointed one of the Big Four consultants to devise the ESG framework to have more focused approach. We now open the floor for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by one on your touchtone phone now. We have a first question from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi sir. On this order of alloy wheels from the Korean OEM, so including the early order that we got from the OEMs, what is the peak order value and the sales value which we can achieve on a yearly basis, and from when it will start ramping up?
So overall, the volumes, Ashutosh, we now have a visibility of almost like 20,000 wheels a month. So when it started, it was like 8,000, then it went to 12,000. Now with all the orders in place, we are looking at order book of close to 20,000 wheels a month. And in terms of start, we have already done a trial production at the plant, and which is now being audited by the customer. So as you know that the production actually is linked with the new model launch for customer, which is slated somewhere in Q3 around the festival season.
Okay. And
what that will be maybe after a year or so.
Okay, the total is peak. So this new order is also for new model or same model we got extra share?
No, it was another model.
Okay, this is also a new order only from the company or existing model?
Sorry?
The new order that we got is also for another new model or also from the existing model of the company?
So we don't know whether it's a facelift or whether it's a new model.
Okay.
It's difficult to comment whether it's existing or new because we normally see whatever is the next launch. So from that perspective, it might be a facelift. It can be a new also.
Okay. And secondly, if I look at the revenue in the other segment, which was around 20% of sales in Q4, around 440 crores, and this time you done 227 crores. So what has caused major decline? Because decline over year is more than other segments, all other segments put together.
So I think other segments.
In Q4 for 21, they contributed 20% of the total sales, so around maybe 440 odd crores. This quarter it is 227 crores. So why the decline over here is larger than what we see in other segments?
I think Concall here. This would be largely on account of COVID only, and I don't think there is any other abnormal item here.
Okay, I'll discuss offline. And lastly, on the export orders in seating, which geography it is from, and basically again when it will peak out in terms of when we can achieve the full order value?
Yeah, so it is in, as I said, one American OEM and other is the European OEM. And both the production expected starting in FY 2023.
So 23 will also peak out basically, or will peak out in 24?
From this order perspective, yes.
Okay, I got it. Okay, thanks a lot.
Thanks, Ashutosh.
Thank you. A reminder to participants to ask a question, please press star and one on your touchtone phone now. We have next question from the line of Aditya Joel from Investec Capital. Please go ahead. Mr. Johar, your line is unmuted. You may
Yeah, sorry. Yeah. Thanks for the opportunity. Sunil, couple of questions. Firstly, on CapEx, so if you can break up, number one, what is the quantum of the CapEx that you're planning for 22 and 23? If you can break up the CapEx between the money that you plan to spend for the die casting business, for lighting plant, as well as for blow molding. That is the first question.
Go on.
Yeah. The second question, is little bit more clarity on the EV component one. So you mentioned that, smart plug and telematic. So what we understand is that you're supplying these two products to two OEMs as of now. And you also mentioned that one product went from under development to production. What was that product? Can you please repeat? And are we supplying that product to the two OEMs that we're already engaged with them in EVs?
Yeah, so BCM is a body control module which has gone into production.
Okay. And we are supplying this to both the OEMs?
No, one of them.
One of them. And on the CapEx side, Sunil, if you can throw some light?
Yeah, sure. So in terms of CapEx, as you said, the alloy wheel CapEx is roughly around 160-170 crore. The blow molding was around 90 crore, and the lighting was around 100 crore.
Right. Okay. Final question, Sunil. So this quarter, if you see sequentially, the performance of the lighting division, the decline was higher as compared to the overall decline, and we were expecting that ramp up in the two orders from Maruti would mean that the performance of lighting revenue is a little bit better. So if you can, shed some light why there is a disconnect.
Yeah. So Aditya, as you know, that the new businesses or what we have secured, the production for them is starting in next year, somewhere in financial year 2023, and that's what we are also putting a new plant. So there was no expectation of those new orders business to start adding anything in the current financial year. And in terms of the overall volumes, I think they are in line with the whatever COVID impact we had. Otherwise, there is no factor which we were expecting and not happened.
Okay. Fair enough. That's it from my side. All the best. I'll fall back in queue.
Thank you, Aditya.
Thank you. A reminder to participants, if you wish to ask a question at this time, please press star and 1 on your touchtone phone now. We have next question from the line of Vimal Gohil from Union AMC. Please go ahead.
Yeah, thank you for the opportunity. Hello, Sunil sir.
Hello.
Sir, my question was on Harita's margins. If you could just highlight, if you would want to quantify, that would be great. But what was Harita's EBITDA this quarter?
So as you know, Vimal, we have stopped giving business-wise profits for last 2.5 years now, based on whatever feedback we had.
So can you indicate, the trend as to whether the margins have sort of fallen in line with the overall business, because that will also help?
Yeah, definitely. So at a big picture, I think despite the COVID impact, the seating business was in green, so they were not in red.
Okay, so basically the margins would have fallen in line with the overall business. Would that be a right assumption, right?
Not fully, because I can tell you upfront, because in the seating there is a big commodity price impact, and while we have got from customer, we have not got from all. So to that extent, we have not realized the full potential of seating in Q1.
Got it. Okay. So gross because see, what I was wondering is, you see your gross margins have improved on a quarterly basis. So I was wondering if that was coming from Harita, or I'm not sure where is that coming from. But if you're saying that the gross margins for Harita have fallen, then what explains the sequential improvement in gross margins?
We are looking from Q4 to Q1, right?
That's right. Yeah.
Yeah, so it's primarily a lot of impact on account of mix also, and also we have been able to get some customers whatever price corrections, but some are still pending. So, but that also plays its part. And in terms of, I think largely it's a mix, which I said it well back.
Okay, fair enough. Sir, in your net debt number, you said that out of 1221 crores, your preferential debt was about 200 crores, right?
220 area.
220, and that will be sort of okay. So that is going to stay for whatever because the shareholders have opted for the after 3-year payment, right?
No, so that's what I said, Vimal. The preference share is something around 228 crore or 229. So there was an early redemption option, and majority of the shareholders have opted for early redemption. So we are expecting that to be paid within this quarter.
Right. So your net debt, your core net debt, excluding non-convertible, now will be about 1,000 crores, approximately.
Yes.
Okay. So this 229 crore that has already been paid out, right? You disclosed that on the exchange.
No, that will be paid out.
Okay. By when?
Information to exchange on Saturday was that they have opted. So within I think this month it will be paid out.
Okay. So probably next, I think September's balance sheet it won't be there. Then.
Yes, you are right.
Okay, got it. So on your you said that your EV components, sir, if you can just highlight maybe if there is any progress that is being made. While we completely understand that you have a very well entrenched relationship with existing OEMs, but the way things are going right now, especially on the two-wheeler front, it becomes very important for us to engage actively with the startups, and then they are sort of gaining ground. So if you can just highlight some progress where if Minda has made on that aspect.
Yeah, also as you know that from the new age, I think you are speaking specifically from new age OEMs because EVs are also manufactured by the existing IC engine manufacturers. So from that perspective, you are right that from the existing players who are also IC engine manufacturers, so we are having a very, very good business already from the EV perspective. From the new age players, we have been having active discussions. We have got some of the businesses already from them for a couple of our products and like seating or horse or something. But we are in active discussion with them, and hopefully within this year we do expect to get more components from these players, specifically which are EV manufacturers or the new age EV manufacturers, if I may say so.
Okay, so the seating products, you're saying that you've got orders from these new age two-wheeler OEMs for your for seating, right?
Yeah, you asked only for two-wheelers, so I have one only for two-wheelers.
Yes, that's right. Okay, got it. Perfect. Thanks a lot, sir, and all the best.
Thank you, man.
Thank you. We have next question from the line of Siddharth Vera from Nomura. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, my first question is on the ramp up of this two-wheeler alloy wheels and sensors controllers. How much will be the revenue we have done for this quarter, and how are you looking at the ramp up say over the next 2 years to control some color?
So two-wheeler alloy wheel, Siddharth, in this quarter obviously had impact because of COVID, so we could not realize the full potential. In this quarter, they would have done something like 40 odd crores of top line, which was broadly in line with the previous quarter. So in fact, it is marginally lower than Q4 because of this May month had a significant impact, and our customer obviously had taken a shutdown, so we also had to. So because of that, the Q1 was lower, but with now Q2, where we are currently planning to not only ramp up the existing lines or also commission the third line, we are expecting good increase in Q2 revenue for two-wheeler alloy wheel project.
Got it. And on the alloy wheel, on the sensors and controllers, how are we looking at the ramp up?
Yeah, so sensor and controller both sort of again if I exclude the COVID impact, so sensor did, if I remember, something like 40 odd crores of revenue in Q1. So I think sensor controller both put together, yeah, it was like 40 or 50 crores. 50 crores.
50 crores. Okay. And I mean, in terms of our targets which we have for FY23, I mean, do you think they have an upside to where the adoption in the evening and that maybe are gaining share and all?
No, definitely. We are working on it. I think both of these businesses are sunrise businesses. I don't know what numbers you have factored in FY23, but the target which you have shared earlier for next 3 to 4 years, I think we are on track.
Okay. So from next 3 to 4 years, what we are saying is like 5 to 8 billion type of top line, right, for each?
No, so total, if I remember, was we shared 4 to 400 crore of revenue plus.
Okay. And lastly, sir, on the depreciation, if I see in the quarter, it has dropped a bit compared to last quarter. Any particular thing which has happened here?
Yeah. So depreciation, as you know, that normally you will provide either a double shift or a triple shift based on the business. But again, in May when there was a shutdown period, so as per the standards, you provide only single shift. You don't provide a double shift or a triple shift operation. So that also leads to some reduction in depreciation.
Okay, so this should normalize in the current quarter.
Yes.
Okay. And lastly, sir, on the Harita Seating side, if you can throw some light on the PV part of the business which we have been trying. I mean, any ramp up in revenues which we are looking, and in terms of new orders, would you have any? Can you share something on that?
Yeah. So Harita, as I said, we have actually got a couple of businesses export orders of peak value of 75 crores a year. So from that perspective, I think it continues to do well. But specifically on the domestic front, we all know CV is yet to pick up. While we are all hearing that CVs are the next in line to sort of catch up, but it's not coming honestly. And Harita, you know, half of the revenue comes from the CV business. So there definitely there are the challenges again are industry driven, because if vehicle doesn't manufacture, our destiny gets linked with the vehicles being manufactured.
Sir, I actually wanted to know about the passenger vehicle side. I mean, we are pushing seats in the passenger vehicle side as well.
No, not yet, Siddharth. I think we spoke earlier also. As of now, we don't have a ready product available from PV side. What we have got secured businesses only of primarily like headrest or center armrest like that, but not specifically sitting for PV. In fact, the target which we also shared last time of doubling the revenue, that doesn't factor any PV sitting actually. If that happens, that will be additional.
Okay, got it. Okay, sir. Thanks a lot. I'll come back.
Thank you.
Thank you. We have next question from the line of Ronak Sarda from Systematics Group. Please go ahead.
Yeah, hi, Slade. So, Bhaskar, first question is on the other expense and the employee cost line item. Is there any one-off in the quarter? And related is, I mean, given the major impact on margin is more of operating deleverage. So how has the utilization been in, let's say, July and half of August? Are we inching back to, let's say, Q4 levels?
No, so employee cost definitely is purely a operating leverage play, because there is nothing exceptional. Only additional is the increments, because last year when employees have all contributed voluntarily for a contribution or a salary cut, if you may use that strong word. So this time I think company has also been, I would say, proactive in terms of handing out increments, which we gave in April itself. A lot of people did not. And we also increased a little bit of quantum of those increments. So that is the only thing which is additional, if you see from quarter-on-quarter perspective.
Got it. Understand that. So yes. And how's the utilization been in, let's say, July and August? Are we inching back to Q4 levels?
Yeah, definitely. As I said, July was very, very good. August, again, as you know, we just heard from a couple of our customers, primarily Maruti also, and where there are some challenges because of electronic components. So I think barring that, we should be on track to at least sort of reach close to the top line what we achieved in previous quarter.
Got it. Perfect. And the other question was on the alloy wheel expansion, primarily for in the Bawal plant, or let's say for the non-Korean OEMs. I mean, the expansion looks slightly, small, given how the industry is quickly migrating to alloy wheels. So is it the plan is to, do the capex or expand capacity much slower, slower than what we had, the industry would grow, or is it more of a cautious approach? Just trying to understand that, because we could have done it a larger expansion in one go.
No, so I think you're referring to the Bawal expansion, right? Of
Bawal,
60 kV.
yes.
Yeah. So why 60 was based on whatever current orders visibility we had. There was something like 30K. And we thought, I think, because we have multiple of that 30 lines, so we are putting up 2 lines because we could accommodate those 2 lines in our existing plant. If you have to go beyond that, then we might have to go to another land acquisition, and putting up another building, and all that. So what these 2 lines are being put up is in the existing plant and adjacent building which we had put up in past, but we could not expand there. So because of definitely the visibility of business we had that point in time, plus considering the space available, we sort of opted for 60K. Definitely, if business grows, we'll keep our options open to see how do we expand further.
Sure. Right. Perfect. Okay. Thank you.
Thank you, Ronak.
Thank you. We have next question from the line of Mumuksh Mandlesha from MK Global. Please go ahead.
Yeah. Thank you so much for the opportunity. Sir, just wondering, on others product revenue, what was the revenue for ICIS, CNG, and blow molding, sir?
Sorry, come again.
On the other product revenue, what could be the revenue for this ICIS, CNG, and blow molding this quarter, sir?
Yeah, so CNG does not get consolidated. CNG is a JV with Westport, so that revenue does not get consolidated. I think blow mold sensors and controllers was, as I said, roughly around 40 crores. Blow molding another 40 odd crore. Delvis another 30 odd crore. Battery another 25 odd crore.
Right. And ICIS, okay, it's controllers, right?
Yeah, ICIS I said 30 odd crores.
Right. And sir, can you just talk about the TG Minda South India? What are the growth prospects for this business? And similarly, you can talk about the TRM and what's the growth prospect for this segment also?
What is that?
TRMN, Tokyo Rika Minda.
Oh, TRMN.
Yeah.
Okay. So both these are joint ventures. So TG definitely with airbag, whatever is made mandatory, it will benefit maybe around 40-50 crores of additional revenue per year based on whatever business we had in hand. So that is on the TG. In terms of TRMN, as of now the business is stable. There is nothing additional which we have got in last couple of months.
Okay. Thank you so much, sir.
Thank you.
Thank you. We have next question from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. If you could just help me with the JV, the share of loss of associates and JVs. If you could just maybe give us some numbers on the bigger JVs. So what kind of profit or loss they see this quarter?
So I think overall it was 5 crores, and as I said, I think couple of JVs like Minda, Westport, and then infotainment business were in profit, but a couple of other like CG Minda and Kosei Minda, I think they were in red. So if you see, the significant part of that 5 crore loss was coming from TG Minda.
Okay. And sir, just from a medium to longer term perspective, I think we've got significant order wins both on the LED lighting side as well as on the alloy wheel side. So just from an industry perspective, wanted to understand how are you seeing the penetration increasing in both these segments? So LED penetration as well as the alloy wheel penetration on the PV side. How do you see the numbers will shape up over the next 2 to 3 years? Any numbers on that side?
Yeah, so I think from that perspective, the biggest move we are seeing from market perspective is more on the alloy wheel side, where there is a faster adoption of alloy wheels. On LED lighting, yes, it is moving, but it's not moving at that pace. But gradually we do expect that also to grow. So in terms of alloy wheel, it is something market around 30% penetration compared to the total wheel steel versus alloy, which we expect to grow in next few years. Just to refer, I think the global benchmark is almost like 80 to 90% in the developed regions. If we have to reach there, then this cycle has to continue for many years. But if you see, you ask question from 2 to 3 years perspective, I personally believe that this 30% should go maybe 40% plus in another 3 years time frame. And in terms of LED for PVs, my numbers are a bit dated, so maybe we will look into these numbers and comment upon rather than just throwing in air. So give us some time. LED I will come back because my number was a year back dated.
Okay. And just on the QIP proceeds, I think you mentioned that there will be redemption of preference shares. So overall, I mean, by the end of this year, this net debt, which is maybe around 1,000 crore approximately today, excluding the preference share amount, how do you see that reducing? I mean, what kind of numbers are you looking at by end of year? What should that number reduce to like that?
Yeah, so our net debt to equity is, I think, around 0.5. That should be around 0.3 at the end of the year.
Okay. Thank you.
That's it. 0.2 to 0.3.
Okay. Thank you.
Thank you.
Thank you.
To ask a question, participants may press star followed by 1 on your touchtone phone now. We have next question from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity. My first question is, it's more on the overall business. Most of the products that we are seeing growth in is coming from new launches, probably in the next 3 months, 4 months. And in general, we get a sense from the OEMs that the chip shortage is going to kind of impact production, probably even impact the timelines in terms of new launches. There are some delays there. So do you actually, in your conversations, are you getting, kind of fixed production targets from OEMs, or do you think it's very fluid right now? How are you seeing the next 6 months pan out because of this chip shortage?
Mukesh, as I said little while back, definitely this chip shortage is an issue which I think as an industry we are all working together. And so far we have been able to sort of stand strong. Yes, there are challenges, and I think we spoke earlier also that this shortage issue is going to remain till maybe early next year, early 2022. Before that, it's very difficult to see whether it's behind us. So it's going to be there. I think we have to find ways and means to get some solutions, and that's what everybody is working towards. Whether it can delay product launches, I think I'm not the right person. I think OEs are the better place, but even if it has to, the existing models will continue, right? It is not that the overall production will get impacted if the new model is not launched. So from customer perspective, I think demand is there, and to whatever electronic components, whatever we have, whether it goes into existing model or a new model, I don't think it should impact from the overall volume perspective in terms of what you call this new model, I would say specifically.
Okay. So, yeah, I mean, my question was regarding, most of these new orders that you've got, like probably the four-wheel alloy wheels or the seatings business, even for exports, if they are largely linked to certain new model launches, those can get delayed, sir, potentially?
Yes, you are right, Mukesh. Like we just spoke about the example of Korean OEM LPDCV. Now, if the product launch gets delayed a little bit, definitely it is going to get impact as well.
Right. But right now you don't see that delay is what I was trying to find out.
You are right.
Okay, got that. And I think most of the questions are answered. Just the second thing is probably on the used chassis. Any update there on that acquisition?
No, so we are in discussion with the automotive. So used chassis was a transaction we did with government. So there were some condition precedents. As you know that being a new country, we wanted to go very, very carefully, and we had made some condition precedent, which is signing of agreement or all the terms and conditions with automotives, who is the customer. So, and for both of these entities, owner was government. So obviously that was a comfort which we drove when we have bought. So we are in discussion with them, and there are some challenges from that perspective. So, but we are trying to see if we can find some solution and come to a common ground. So that still is in, I would say, in works.
But your target completion date is still this year end, sir, or any change there?
Yeah, so target completed, I think we said 30th of November. So
Right.
ideally,
Okay.
if it happens, should happen before that.
Should happen before. Right. Thank you, sir. I'll get back in with you.
Thanks, Mukesh.
Thank you. To ask a question, participants may press star 1 on your touchtone phone now. We have next question from the line of Vimal Gohil from Union AMC. Please go ahead.
Yeah, thanks. Thank you so much once again. My Uchesh's question has been answered. Just one more thing, I wanted clarity on the revenue decline that we've seen in the other segments, sir. If you could just highlight which sort of product segment saw a higher decline, and possibly if you could just highlight the reasons for the same.
You are saying from previous quarter to this quarter.
Yeah, that's right. Which product saw segment?
Yeah, the biggest was our aftermarket. So while the basic components which get manufactured are part of the business respective segment, but a lot of products which are traded, that comes in others. And the other drop was in, I think, this lighting is the same segment. Then I think controller and both sensor, again primarily because of COVID. So nothing I am seeing which is out of normal.
Okay, assuming that there is normal production ramp up, and notwithstanding the chip shortage challenges, you do expect the growth to come back in the next quarter, is it?
Absolutely.
Fair enough, sir. Thank you.
Thank you. Anyone who wishes to ask a question may press star 1. We have next question from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, just one follow-up question from my side. If you could just help us with the total capex and investments that you're planning for this year, and some indication for the next year as well.
Yeah, so Nikhil, you know that capex, as we shared last time, the numbers remain same. The project capex was something around 350 crores, considering all the 3 projects which we just spoke about, which is the alloy wheel project, lighting project, and the blow molding project. In terms of the brownfield growth or a sustaining capex, we are expecting to be around 200 to 250 crore this year. And from next year onward, as of now, there is no certain visibility on the growth capex. Yes, we might have some requirement which currently which is in the works. Not something which can be announced today, but there might be something on the growth capex next year, but not to the quantum which we are doing this year. And sustaining capex should remain in the same range.
Okay, thanks. And just another question on the alloy wheel. So, assuming that, say, maybe 2-3 years down the line that the demand continues to improve, you mentioned that the space is a constraint in the existing facilities. So, if we do decide to go ahead and put up a greenfield, what kind of investments would it entail for, say, a capacity of maybe 60K or 120K wheels per month?
So, broadly, 60K should cost something around 200 to 220 crores. Why it is costing less? Because of it's in the existing infrastructure and building was already there. So if you double it, 120 should be around 400 crore kind of range.
Okay, got it. Thank you.
Thanks, Nikhil.
Thank you. We have next question from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Thanks, Bola sir. Just few questions might be repetitive, I missed out. So the whole Harita deal value plus the residual Furor stake purchase and the investments like Uzbekistan, whatever you are doing, all these things are largely getting funded by this QIP. Am I right, sir?
You're right.
And also, other than internal cash flows, so this year your project capex was 350 crores?
Yes.
And maintenance capex will be 150, 200?
200 to 250, I said.
100 to
the same number we gave last year. We not increased it.
Okay. So and then the year-end debt equity, which you said in the call earlier, is after considering all these expenses and the QIP money raised.
Yeah.
Perfect. And next question, sir. I missed out. I think you discussed what has been Harita's margin this quarter. Though obviously this is a COVID quarter, this is not a benchmark, but still.
So as I said, Vasudev, I think somebody else also asked this question.
Yeah.
We are not doing business-wise margins actually.
Okay.
But I said it is in green. It is not in red.
Okay. And any outlook from a Harita perspective you can highlight from next 2 years perspective?
No, you are right, Vasudev, in terms of outlook. While it is very difficult to comment because half of Harita's revenue is on CV, and CV continues to see the volumes where we all know about it.
Mm-hmm.
So that's number one. Number two, what we are doing is what we are having in control is while we have launched this Harita seating into aftermarket, but we don't expect that to be very, very sizable in the first year. Maybe second, third year onward, it may become more meaningful. What we are also working is in terms of addition of at least one two-wheeler customer this year, and we believe that we are on track for that. We should be able to add one two-wheeler customer to Harita seating, which has not been there earlier. So to see that how do we increase the customer and the overall share in the two-wheeler seating business. Plus, Harita has actually, honestly, doing very well in the export market. In export market, they continue to sort of secure businesses. They have also secured businesses from some of the EV players. So sitting as a business, we are very confident that we should be able to achieve our target, what we shared in the last call.
And what percentage of its revenue now is exports?
What percentage of?
Harita will be exports now?
Harita export is roughly around 100 odd crores currently.
Okay.
So we are expecting that to grow significantly in the coming years.
Sure. Yeah. And my last question, sir, like Ola launched its models yesterday and some other launches also happening. So like BMS or motors, if you can specify any such orders you are getting from such new players as such?
Not from Ola, honestly.
Anything was supplying to Ola as of now?
No.
Okay. And anything to the likes of Ampere or Hero Electric, etc.?
Yeah, we are. So to other players, we are supplying some of the components. So we are in discussion with, including Ola, with almost all of them. Because what was happening so far, you know that because of the small volumes, they have been primarily importing. Now with the volumes increase, and also if you have to get the benefit under the same scheme, you have to localize. So now everybody is now in discussion for localizing the components, and we are in discussion for all our components with all the new age players. Existing, we are anyway there. In the new age players also, we have got a couple of components already, and we are in discussion for more. Hopefully within this same financial year, current financial year, we should be able to secure more businesses from these players.
So will it be right to assume that you will be confident of securing LED light orders from Ola?
I won't comment on specifically, Vasudev. Obviously, we would like to, but
so that's a large opportunity as such.
So definitely, I think every component is a large opportunity for us because every business is independent. So our focus is not only that. Our focus is all the businesses. Whatever we can secure, I think that will be great.
And one last question, sir. On one side, many experts or articles are saying that BMS is a very important integral part of e-two-wheeler and it should be an in-house process as such. And on the other side, many component players and others are saying that BMS is one of our key part of portfolio which will get outsourced. So if you can explain like how do you see the battery management system going ahead will play out?
Vasudev, you are 100% right. For BMS, as of now, it's I would say broadly a split strategy. Few players are having in-house, few players are having outsourced. We, like you said, there are other players also, but we have got our anchor customer for BMS. We should get into production within this year. So yes, it's a mixed approach. Not necessarily everybody will manufacture in-house, and that's how we have been able to get business from one customer.
Sure. That's great, sir. All the best. Thanks.
Thank you, Jay.
Thank you. We have next question from the line of Vijay Karpe from Cranston Investments. Please go ahead.
Thank you for the opportunity. Sir, you mentioned that the four-wheeler alloy wheel penetration is currently at 30%. I missed the number. Where do you expect this to go to and by when? That is the only question.
Very difficult to comment, Vijay. What I said was that in developed market, the penetration is almost like 80 to 90%. Over a longer term, I think as a country, we should also reach closer to those numbers, but that may be many years forward. In terms of 3 years plus scenario, we are definitely expecting this share to cross from 30 to 40%.
Yeah, thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to Mr. Bora for closing comments. Over to you, sir.
Yeah, thank you. Thank you very much. So thanks everyone for joining on the call. I hope we have been able to respond to your queries adequately. For any further information, we request you to please get in touch with us. Stay safe, stay healthy. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of Minda Industries Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.